So it's Duncan the Realtor, your licensed Maryland real estate agent, here with another significant video that's going to help you get ready to buy your first dream home, or your second, or your third, or your investment property. These tips on how to structure your credit file will help you secure the financing that you need. Or if you're so inclined to have a ton load of cash right now laying around somewhere that you just ready to rock and roll with, you could probably just watch another one of my videos, because this one in particular will not apply to you. This is for people that need to get a mortgage so that they can buy a home. And if you are dreaming of buying a home, it's important to understand what makes up the ideal credit profile for securing a mortgage.
All the time on my grind, 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 all the time on my grind.
Your credit profile can significantly impact your ability to get approved for a home loan and also the terms that you receive. An excellent credit score is something that lenders use to gauge your credit worthiness. So if you have poor credit, you're going to pay higher interest. And if you have excellent credit, you're going to pay lower interest. That's generally the rule of thumb, even though there's been new laws that have been proposed and entered into law that kind of restructure that, but we haven't really seen the direct effect of that yet. So at the time of this recording in 2023, good credit will still get you a more favorable term for financing. Overall, lenders want to see that you're below 43% of your debt to income ratio. That's including your disposable income to cover your monthly debts, including your mortgage. They also want to see steady employment. They want to see job income history. So if you're self-employed, it's a little tougher for us because we have to show 24 months of banking statements and also tax returns. But if you're a 9-to-5 person who receives a W-2 at the end of the year and you're filing your taxes, they just want to see you in the same industry for a certain amount of time, typically 2 years or better, and or they want to see that you can hold this type of industry position. So if you did switch jobs, say in 2022 or 2021 during the pandemic, as long as you were in the same industry, you can still use that finance. Better yet, you can still use that for financing as if you had one specific type of employment, as long as it's in the same industry. So, for example, if you work in a warehouse, you don't want to go get a job in radio and say you've been working for 2 years consistently, because they'll flag you saying that it's a different type of industry. On the other side of things, if you were working in a warehouse and then you moved into a different department or went to a different company doing the same type of work, they will count that towards your consecutive term of employment, which will ultimately help you secure the financing. Now, there is something that everybody knows about, and that's paying your bills on time. That is a must. That is definitely a necessity. Credit utilization is equally as important, as it makes up just about a third of your credit score. And credit utilization is basically the amount of credit that you have available to you versus the amount that you're actually using, hence the word utilization. And typically all the credit bureaus that I've ran across say that you should have your credit utilization under 9%. I have heard a lot of people over the years say 30% is a sweet spot. But more recently, with more information on the credit reporting algorithms, we've now found out that credit utilization under 9% ranks you more favorably than pretty much any other percentage. Even if you paid your credit utilization down to 0, for some reason, the algorithm would read 9% better. So take that for what it's worth. And there is a way to help out with your utilization outside of paying down your debts, which is always a good thing. But if you're not in a position to pay down $20,000, $30,000, $50,000 in credit card debt, another option for you could be to become an authorized user on someone else's credit card or revolving credit account. This will allow for their credit utilization or for the account utilization to report on your credit file, giving the appearance that you have more available credit than what you would typically with your own credit file. For example, you can go to a company called TradelineSupply.com, and I'll actually leave a link in the description of this video where you can purchase trade lines to boost and help your score by lowering your utilization and or increasing credit history, which is an equally important component of your credit file before applying for a mortgage. The credit history or length in credit is the amount of time that you've actually had your social security number ranking you, whether good, fair, or poorly, in terms of credit reports with the 3 major bureaus. If you started paying on your credit cards at the age of 16 back in 1980, and it's 2023, your credit history or length in credit would be from that time till now. So basically about, my math does me right, about 53 years. So a key thing to look out for, and it doesn't hold much weight, but it does hold some weight depending on the lender that you're going to. If you are going to get Tradeline for authorized user account placed on your file using Tradeline Supply, you don't want to get a trade line that is older than you, because it will look crazy if it says you have a 70-year credit history but you're only 25. Think about that when you're purchasing specific authorized user accounts. Again, I will leave a link in the description for that website because they've actually helped me, and it can help you with utilization, available credit. It can also help you with length of credit as well. For example, if you're added as an authorized user to a credit card with a long history of on-time payments and a low credit utilization, your score will most likely. This is because lenders will see that you have a positive credit history even if you don't have any credit accounts of your own. However, it is important to note that if the primary account holder has poor credit, the authorized user's credit score could also negatively be impacted. This is because the authorized user will be associated with the primary account holder's negative credit history. So make sure if you do get an authorized trade line, you're either using a verified supplier like Tradeline Supply or a relative or loved one that you know is just on top of their shit. Overall, adding authorized user accounts to your credit file can be a good way to improve your score, especially if the primary account holder has a good or great credit history. However, it's important to choose a primary account holder carefully and to monitor your credit report regularly. I personally use Smart Credit to monitor all 3 of my credit reports at one time, and they give you like daily alerts and things like that. I may actually leave a link in the description for Smart Credit as well. They basically show you all 3 in one place, and it's pretty convenient. Bottom line, the call to action for preparing your credit file to get you in position to shop around for a mortgage, investment property, or for primary residence is to get your credit file in order. If you got too much credit card debt, yes, number one, try to pay it down as much as you can. If you can't, before you apply for a mortgage, look into becoming an authorized user on a friend, family, or loved one's credit card or revolving account. And if you're not in position to do that, go to a company like tradelines and purchase authorized user trade lines, because they will help boost your score in most scenarios. And I say most scenarios because there's no bulletproof way to tweak around these algorithms that we're all subjected to, but that's a whole nother video that I'll definitely jump on next time when we have more time for a different topic. But if you're serious about buying a home, start working on improving your credit profile today. By following the tips in this video, you can increase your chances of getting approved for a mortgage with a favorable term and securing the best possible interest rate for your home that you're going to be paying on for 10, 15, 20, 30, 40, however many years. You might pay it off next year because you get into that bag, and I salute you for that. So until next time, again, it's Duncan the Realtor signing off. I hope this was informative and something that you can use, but again, this is not financial advice. I'm not a financial advisor unless you are my child, so take it for what it's worth. Stay safe.